Hello everyone, I'm Dr. Stock, and in this video we're taking a look at where the markets brought us last week and what that means for our direction next week, especially with the FOMC meeting happening March 21st and 22nd, waiting to hear if we're going to get a pause or a 25 BP hike. We'll take a look at the Fed Watch tool, and we'll also talk a little bit about market implications for the week coming up for us in this video. Real quick before we get there, check out the link down in the description for Moomoo. By clicking my link for my channel, you can get up to 17 free stocks. By signing up and depositing $100, you get 7 free stocks, 2 AI draws, and 5 other stocks valued up to $2,000. By depositing $1,000 or more, you get 17 free stocks, still including those 2 AI draws, plus those 15 other free stocks, still valued up to $2,000. Take advantage of the opportunity by clicking my link down in the description. Support yourself while supporting this channel and everything that I bring to you here. Also, while you're poking around down in the description looking for more opportunities, find the link for the Patreon, click on it, sign up, get access to my Patreon exclusive content, as well as access to my private Discord community. That link can be found down in the description. Click, sign up, come join us. We'd absolutely love to have you. That said, I'm Dr. Stock, Doctor of Education. Let's get right into the content. The first thing that I want to take a look at is the SPY and talk about where it's been this past week and where it's going. And look at this messy, noisy graph that we have. I'm going to explain it in just a moment, but I just wanted to see the trajectory that we've been on, the path that we've been on, being well above the 200-day simple moving average, up above the 50-day, and then we managed to cross over those, the death cross, the big sell-off, that huge gap down that we had, and then the closing back up. Big gap down again, close, and then we keep on wiggling along that 200-day. Now, where does that put us more recently? So all the way back from October the 13th, we've had a bottom there, which you'll see for this trend line I did not include. However, I did get the other bottoms there that we have going up along this. This could actually be part of a minor area of support moving on from there. But I do believe that this diagonal that we have does serve as an area of support for us as we go on. And you'll see more recently towards this end that it's acting more as an area of resistance since we got that news about SVB. The SPY, the S&P, has been suffering from that time, and it hasn't quite recovered. As a matter of fact, if we zoom in a little bit more towards that end, there we go. You can just barely see this orange line, which is the 200-day simple moving average, and we actually closed below that, and that's important because now we have the 200-day as resistance as well as this resistance line that we have going through here. So that's not going to be great for us for the S&P. However, we'll see if we retest that as we open up the week next week. There could be a lot of uncertainty. I expect a lot of volatility, so we'll see if that holds out. Now, for these other lines, here's the diagonal line going through. We could drift upward along that line. Breaking up above that is important for us for 2 reasons. 1, then we can use it as support. 2, it actually does put us back up above the 200-day, which can be excellent support for us. We do want to pay attention to this horizontal line that comes right about through the middle here. This is the $400 mark, which pretty much equates to 4,000 in the S&P, which is an area of psychological resistance that we have, and that's also where the 50-day currently resides. If we have a bullish week for the S&P, that's going to be a very limiting factor for us. So breaking up above these lines, we have a decent amount of way in order to push through a little bit to fight through for the S&P. It did not perform as well as the NASDAQ, as actually some of the big tech has been the flight to safety this past week, which was actually pretty crazy because you don't normally see that in these sort of environments. So a lot of times the S&P will do better, but the NASDAQ has outperformed it. So we'll look at the Qs next. Just real quick, let me zoom out so we can look. I want to give just a little bit more commentary. So you can see all the resistance that we have above the current price action, and breaking up, or I should say retesting this one at 417, that really makes the decision if we're going to see further climbs in this or if we're going to fall back down. So if we can break this previous peak that we have back here, we'll be in really good shape for the S&P. So that means making it through the banking mess that we're in right now, seeing reduced inflation, also and a less aggressive Fed. I think that those are all contributing factors that would allow us to have some longer term movement in this. And we can't forget about Q1 earnings that are coming up sooner than later. We'll be hearing from the different companies, hearing about their earnings and what they see for the rest of 2023 and into 2024. So that forward guidance that we get is going to be huge at determining if we're going to continue rising up along this line here, or if we're going to fail to break through resistance and we're going to tumble back down and re-experience some of these lows that we've had before. So let's look at the Qs and see where that puts us. There we go. All right, so we have this minor downtrend that we have right across the tops of these. We tested it 3 different times. So back here, this goes all the way back to August, and then on our last rally, all the way up to Groundhog's Day, where I guess the groundhog saw its shadow and decided there's going to be 6 more weeks of winter. We trailed off from there. So me being from Pennsylvania, I had to toss in that reference. And moving into some of these areas that we have of support and resistance, we actually came up and touched this diagonal, also touched this horizontal right at about 309 or so before failing to break through resistance and then settling back down a little bit. Now, I didn't mention the RSI for the SPY, but that is below 50, and that is acting bearish, and we have a bearish momentum indicator happening on the RSI. For the SPY, for the Qs, we're actually up above 50. We are well above 50 right now, and this actually isn't too bad of a setup for further strength moving forward. Now, technicals do not beat fundamentals, it's the other way around. So for the Qs, hearing what the Fed has to say from their meeting, seeing what happens with the banks moving on from here, those are going to be definite indicators of the direction of the market as we watch that happen. Volatile is definitely the word for the week, that deciding on that direction, there's so many variables at play. I think it's hard to choose which way we're going to see this go. I can say from the technical analysis that the SPY has an uphill battle to break through a lot of resistance to keep moving up higher from where it's at right now, and the momentum is moving out of it, that we have more bearish momentum than bullish. And then as per the RSI that we have for the Qs, it has more bullish momentum than bearish, so we'll see if money continues to flow into the NASDAQ 100 and allows this to keep on moving up from where it's at right now. We do have decent volume taking place, and we'll see if we do happen to break through that resistance. If not, our support is down at about 300, which is about 1 2/3% down from where we closed out last week. And then after that, we get much better support near that 50-day simple moving average, all the way down at 293. So we'll see what sort of news we get just about banks, about the economy, also about the Fed coming out and talking. And we'll talk about the rate pause that we might get or the 25 basis point hike. I think those are the only 2 options that we have right now. So here's the CME Fed Watch tool, and on Wednesday, March the 22nd, we find out if we are with this bar right here, which is the pause case, that we get no rate hike, which right now says 38% chance, 62% chance of seeing a 25 basis point hike. Honestly, I think to show confidence in the banking system, they're stuck with the 25 basis point hike, and that they have already set money aside through a little bit of their quantitative easing, through printing out of thin air the $300 billion that's been reported recently. So kind of setting up just in case there is more weakness in the banking system from further tightening. So this is that really threading the super tight needle that we have here from the Fed. Will they be able to help continue to raise rates to tamp down inflation while not causing any sort of further bank disruptions? I think it's going to be really, really close, and I think that they're going to do the 25 basis point and then leave themselves wiggle room through some of the quantitative easing measures, just in case they need to gird up any other banks that might happen to suffer from the recent weakness that we've seen. So let me summarize this thing. In the S&P, when we look at the SPY, we're going to see some more weakness there, in my opinion. So a little bit more red to maybe a moderate amount of red coming up from that as we continue to see flights to safety this week through trading, and the Fed could totally throw that off if they throw a curveball at us. And then for the Qs, tracking the NASDAQ 100, I think that one has a better chance of being a little bit green to a moderate amount of green to end the week if the flight to safety continues to push into the larger cap tech stocks that we've had. So we'll see if the strength holds out for the NASDAQ, and we'll see if the weakness holds out for the S&P. Overall, my sentiment on this one is mixed, as I think that there's going to be a lot of volatility in this week. There's a lot of variables, and it's just hard to say. So anybody who's out there making volatility plays, you day traders out there who love the volatility, this is probably going to be a very good week for them. For people playing some swing trade positions, trying to play week to week for how this is going to go, it could be a much trickier week to gauge. So those are the thoughts that I have on this week ahead. If you'd like to hear more of my commentary, check out that link in the description for the Patreon. Click it, sign up, get access to my Patreon exclusive content, as well as access to my private Discord community. We'd absolutely love to have you over there. Also, down in the description, do not forget about your free stocks available through Moomoo. Through my link down in the description, click it, sign up, get your free stocks. You're supporting yourself, and you're also helping to support this channel. Thank you guys for watching this video. If you did like this video, make sure you have clicked the like button. If you want to see more of my content, click that subscribe button and ring the notification bell to see anytime my videos come out. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.